Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 23rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of real important economic data, I should say, across the pond. We did get Italian retail sales came in lower than expected at negative 0.5%, was expected to be 0.2%. And the German consumer climate came in at 10 versus the expected 10.3. None of those data points are really widely looked at. We did get final GDP for the German side, came in at 0.4%, right in line with expectations there. Then this morning we had Treasury Secretary Mnuchin speaking. Not really a whole lot to talk about there. He, it's just regular fodder for the most part. We did get unemployment claims here in the United States in line with expectations at 244,000. And then we just got out the natural gas storage, came in at 89 billion cubic feet drawdown, was supposed to be a drawdown of 86 billion cubic feet, so slightly more than expected there. And a little bit later on today, we have crude oil inventories and FOMC member Kaplan speaking. That's at 1 o'clock Eastern. The crude oil inventories is at 11 o'clock Eastern, which is just at about a half an hour from the time of shooting this video. Anyway, on to the overall markets. We got crude oil cruising higher in front of that economic data point on the crude oil inventories, up above the value area high. It's just really been bouncing back and forth between those two value areas. Today, well above that and pushing quite higher. We're going to have to wait and see what the overall markets do and what that inventory number looks like to really get a good feel as to what crude oil is going to do. We got a bit of a mixed bag in the equities, but if we look at like gold /GC up over $15 right now, and well above the 200-day moving average that I've been talking about. It looked like it might go below that yesterday and settle below there, but we had a afternoon rally that brought that back above. So the bulls in control here on on gold futures, and we do have the 9-day crossing the 200-day, which gives a little bit more bullish momentum to the upside, if you will, and it will really become a lot more bullish if we get the 50-day to cross over the 200-day, but I don't see that happening anytime really soon. It might take about a week to 2 weeks of continued rally for that to end up happening, and it would have to be a pretty good rally going on in those next couple of weeks to get that to happen. So on to the bonds up on the day by about 12 points, really struggling as they did yesterday to push through that 50-day moving average. So the market trying to push above that, but with the Fed governor speaking, they're pretty set in their ways as to increasing interest rates pretty consistently. So I don't really see bonds, despite the fact that we may see a pullback back in equities, to have a whole lot of room to the upside to rally. So I think they're pretty much stuck in the mud for the most part. We might see some jostling back and forth, but for the most part, they are stuck there for right now. Then we have the equities market. A bit of a mixed bag here is what I was talking about. The Russell or the RUT is leading the way to the downside right now, but we do have Dow Jones Industrial Average up on the day, making a new historical intraday high. It's not going to be a settlement until we see it, but with the rest of the equities kind of coming off right now, I don't know if it's going to be able to tread water that much longer. As you can see, we're consistently down ticking on the lows of the Dow Jones right now, just up 18.5 points right now. NASDAQ, they're also kind of pushing to the downside, looking like a pretty much of a confirmation of a top here with a spinning dojo. Yesterday, we made a new high today, but we have an engulfing candle here. Looks like the massive rally here. There's going to be some profit taking going on. We could easily see this pull back quite a few points and maybe even come down and test this area of 51.75, let's call it. But that would be the target to come down, and that's pretty much the first area that's going to act as a support, which acted as resistance on the way up. So let's call it 51.70, 51.75-ish area. Then on to the E-mini S&Ps, they're signaling a little bit of a different story here with just, if we're looking at just the charts, we got them down just over 2 points. But yesterday's doji here and then today's doji, the way it's setting up, that could indicate a continuing pattern where the market's just taking a bit of a rest. So anytime you see these counter or opposing candles, the way they're set up there, that could very well signal a continuing pattern. But the way the RUT is looking, it's we can throw the RUT in there right now, and the RUT is really starting to look like a big confirmation to the downside as it tested its value area high. And yesterday and today, the big sell-off. So those are pretty strong signals to the downside if we were to end the day like this or with this kind of a snapshot. It would look very bearish. This is the E-mini S&P breakdown on a 15-minute chart. As you can see, early morning opening, or early morning before the opening rallying up, but then on the opening of the day session, the market just kind of fell out of bed at this point. Could be trying to print some of these overnights in there, but at the end of the day, it looks pretty bearish as of right now with the overall equities coming off and the Dow Jones really being the only one above water at this point. So for that, with the Dow Jones being the one that is the lagger in the sense that we've got the RUT down, we've got the Dow Jones down, the E-mini S&Ps down, the NASDAQ down, the Dow, one of the few ones that is holding up right now. I decided to just throw in some puts on this, and I don't usually just go out and buy puts, but it seemed like a pretty good idea at this point. So I went into the Dow Jones, went into the April, bought the 205 puts for $2.58. Now, I didn't do that with a lot of size. As a matter of fact, it's one of the smaller trades that I've done, but I just want to add a little bit of short delta to my portfolio, and thought that was probably the best option for this with the really low implied volatility. If we can get a bit of a pullback and implied volatility to expand, that could be a really nice trade. So I did a really small, just to play the game, I guess, if you will. I don't usually like to just go out and buy puts and buy calls, but I decided that was probably the best strategy for this kind of situation. On to Netflix. Netflix, I decided to add a little bit longer, a long trade to this. We're in a nice trend here, and Netflix seems to just keep trudging along. With this bit of a pullback today, I decided I'd try and take a stab at it. Again, small trade, but went into the April again, bought the 130 calls, and then sold the 160 calls. Now this is actually setting us up for tomorrow's webinar, following all the rules that I go into with that webinar. I don't have enough time to go through all the reasons and everything else, but for all intents and purposes, fell right in line with those rules for that webinar. So check that out. Go to protraderstrategies.com. Find out how we set this up to increase our probabilities of success with a strategy like this. So Netflix on a bullish trend, trying to follow along with that, with this bit of a pullback today. And with that, I ended up paying $13.78. I don't know if I mentioned that earlier. Then on to General Mills. This is a trade that I've had on for some time. I haven't been able to get out of it yet, but it's in the March I originally sold the 65 calls for a little over 50 cents, trying to get out of it right now for right around 20 cents. I'm just going to leave it in there for right now because the market hasn't really made much of a effort to really push higher. So I'm not going to really try and chase that one, especially with the overall markets pulling back. I might be able to get it just as the market pulls back today. This is a little bit more than my rule for 50% of the max profit, but with a bearish tone today, I'm comfortable with accepting a little bit, making a little bit more money on this trade and trying to just work it for a little bit. If it was a big up day today, I'd probably be looking at that 50% of max profit. But with the down day, I'm going to let it breathe a little bit. So I mentioned tomorrow we're doing the webinar on the long calls. So check that out. It's a perfect scenario for low implied volatility. Not a whole lot going on, but we have a bullish trend for the most part in the overall equities. This is a way to limit our risk, though, if there is a pullback. If you go out and buy stocks at these all-time highs, that seems like a pretty risky proposition. But if we're doing some limited risk scenarios, then we can justify that. All right. So go to protraderstrategies.com and I'll talk about how to increase your probabilities of success with the long call. If you can't take that, take it easy.